Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. Well, Tuesday, election day. Going to be an interesting day here in the markets. I don't expect to see anything too crazy. I actually expect today to be pretty quiet, but I'm already seeing action that is exceeding my expectations. Let me show you what I mean. So, coming up here, pulling up the volume profile, ZN. So yesterday we kind of started to test some of those lows. There does appear to be some amount of, I guess you could call it, support. We are turning up. It's quite aggressive here though this morning, actually. They're starting out to the upside quite aggressively. I don't know. Yesterday, this move down appeared to be driven by a lot of corporate issuance and issuance from the UK. That issuance from the UK will be continuing all the way through Thursday. So I want to be really careful, especially around the 7:45 or 9:45 Eastern time period. All right. S&P 500, they're climbing up here and starting to recover what we lost from November 2nd, which was the FOMC day. But man, do I not have these days? Do I not have it labeled? That's weird. I swear I did. Maybe I labeled it over here or something. I don't know. I guess it didn't get saved. All right, oil down from yesterday, trying to make a comeback. Natural gas coming off of its highs. That was like quite a crazy spike there in natural gas yesterday. Gold and silver kind of in a range here after the recent spikes on that was non-farms, right? No, that was the Thursday. Okay, and copper really took off. Bitcoin though, okay, so some crazy stuff going on in Bitcoin, dropping below 20K as rumors that FTX may be insolvent abound. So yeah, we will see where that goes. We haven't had like the quote unquote liquidation event yet, so I think I don't know. I'm not quite sure what to think of it, but and then the dollar still coming off of its highs. It's kind of funny that the dollar finally like kind of, chilled out, and then Bitcoin doesn't get to take advantage of that. Good morning, Radoslav and Velo. That's a new name. What's up, brother? Well, I'm not your brother, but I thank you for coming by. What is wrong with my chat window here? I'm going to fix that. Hold on a second. There we go. All right. Oh, and we didn't even start the music. Start the music. Oh, you know what? I restarted my computer. I never started my volume meter. Brother from another mother, yeah. There we go. I don't know. I'm not your brother, buddy. I'm not your buddy, pal. I'm not. That's what I think when people call me those sorts of names. You know, the other one that I don't like is boss. I don't like it when they call me boss. Not the boss. Not yet. Maybe if I was the boss, then maybe they could call me boss, but Now, a couple of people did interact with my hot take. The decline of internet culture started when Google Reader shut down. It's true, folks. Man, okay, so I was saying, well, they are starting out quite bullish here, but we do got some issuance today. I am a little bit concerned, especially around the 7:30 time period. And look at how quickly they turned back down here in the treasuries. And there was some volume in it, behind it. They haven't canceled out the volume from before the open at 22. So 22 would probably be the bottom of this thing. But Leslie Phillips died. I don't know who that is. Oh, he was a character in Harry Potter. Wow. The Marketeer asks, why isn't VIX higher? Good question. My Twitter feed has become too painful for crypto's pre-bankrupt hotshots. Posts shots. Coinbase. Oh man, are we gonna have? He thinks that we're gonna have like a real collapse in cryptocurrency. I do kind of suspect that it could be coming because the value of Bitcoin is still elevated by my measures. So. Right. Oh my gosh. So if you guys have been seeing this, so here's a headline from Politico. The 2020 presidential election was rife with allegations of voting machine hacks that were later debunked. Yet there are real risks that hackers could tunnel into voting equipment and other election infrastructure to try to undermine Tuesday's vote. It's just crazy that that's like a real headline, that they contradict themselves like that. Let's see here. Mohammed A. El Arian. The conventional wisdom is understandably that the consensus forecast of a gridlock America after today's midterm will keep the government out of the way of markets. Yet, the economic context calls for smart government policies, supply-side fiscal protection of the most vulnerable segment of the population, global policy, leadership, etc. to help enhance the economy's ability to grow strongly, sustainably, and inclusively, especially as a late Fed seeks to contain inflation. The two combined means that a gridlock would quickly shift attention to the next election in 2 years, and that a length and depth of a possible recession would have quite an influence. Man, this is such a good observation here from Mohammed A. El Arian, that we expect gridlock, that Republicans will take over, and there's a lot of things that they'll probably want to do, but that Joe Biden will probably veto any of them unless there is like a real crisis, right? If there's like a real crisis, then they're going to, then maybe they are able to come to an agreement, right? Well, the problem is that all of the problems that we have right now are really problems that you kind of need the government to step in and do something. Like, not that you need the government to step in and do something, but rather they are kind of problems caused by the fiscal side, and therefore you're going to have a really hard time fixing these supply side problems without some sort of a change in the government. And not only that, but a lot of these changes are happening at like agency levels, executive level type things. So it's gonna be a bit of a pain, because yeah, there's going to be like pain out there in the markets, and it's like the only way that we can get relief is when Joe Biden is out of office. If that becomes the narrative, that would be a very, very interesting both political and economic environment that I'm not sure we've ever seen. Like sitting and waiting for 2 years for Joe Biden to get out for the economy to heal. I would hope that it doesn't turn into that. It almost sounds too fantastical to be what actually happens. But, that does kind of look like the situation we have ahead of ourselves, right? Uzi, I can't believe U.S. elections was enough for NT to up margins. Really? Did they up their margins? That's interesting. I mean, if you're going to trade it tonight, then sure. Like, here's the thing. Okay, I don't expect anything to happen, anything significant to happen for tonight's election. Okay, but there are still going to be people that are going to trade it, right? There's always that big time volatility around an event like that. So if you're going to be trading it tonight, I could see increase the margins for them. Sure. Oh, it's not going to let me mark this as spam. That sucks. Yeah, one might actually have been pitching. All right. Wow, just a 4K IPS monitor is 500. I'm looking at like all of my promotional emails and stuff right now. I don't know why. Because I'm too ADHD to trade this morning, apparently. Oh, wait, somebody commented on why technical analysis spells the inelastic market changes everything. Let's see, what is this? Let's see what they're oh. Not showing up for some reason. Okay. Jotaro says, but price action is a result of order flow. So if some type of pattern is displayed on the DOM, it will also show as a certain price action pattern. That's actually correct. The HFTs make millions in micro. Well, I actually, while for a walk, I think you would actually be surprised at how small the individual wins that the market makers can make. It's really something that it's like, it's just a little bit here, a little bit there, a little bit there, and then at the end of the day, it all adds up to be a lot. Right, and then that's how you get it to, over the course of a year, it adds up to billions of dollars. But I think that's kind of an important thing to just note, is that just a small number of you getting in on a move because of some technical pattern that you think you see or whatever could be enough for a market maker to have incentive to make your life difficult, let's say. So what the market maker doesn't necessarily come in and like say, Walfer, he got in long, so I'm gonna push markets down. But what it does do is it looks at the volume that it received. It doesn't see any indications of informed trading, and it's going to make its bid or offer weaker based on which side of the market is more advantageous for them. And so that's where you can kind of get this thing where it's like it's random action, but it moves down on less contracts than it moves up, and then you get screwed over. That's why that happens. So that's why I would highly recommend for a retail trader to not take a trade unless they have a piece of information that strongly suggests what the future orders are going to be and what direction it's going to go. Where did you learn how to read the DOM? Well, I started with the No BS day trading course, which I still love, just because it's, I mean, the basic course, it's only like $90 now. And I thought it was totally worth it. It's just a great book. But I don't trade the patterns per se in the No BS day trading. So if you go and you watch my own video series about order flow, and if you've read the No BS day trading books, you might note that I kind of talk about similar sorts of setups, but the approach that I'm taking from it is a little bit different, because I'm looking at it and I'm saying, well, okay, if I want to get in, I want to try and catch the edge. Okay, maybe I could have bought there at 26.5. Then I'd have a bid behind me. That would be good, right? I want to try and catch the edge. Or I want to try and catch an iceberg. If I started seeing iceberging at 26.5 and I wanted to go long, then heck, why not? Good iceberg, get in there, right? Whereas most people will try and take order flow as, okay, here's like a specific setup and I'm going to predict with it. And so the setup says that I need to go long or go short, and this is my stop and target. I don't do that. So I've taken a much more expanded view of order flow that I learned largely from reading empirical studies. So there is actually a wealth of study out there, although it tends to get put under the category of market microstructure. So once you found a couple of studies like this and you got the terms and everything, then you can find a lot of studies, and there's a lot to learn that's been empirically proven about markets. But again, this is where I've kind of come from. What I want to do is I want to find something that is truly predictive, right? So there could be, you know, like, I think that the Bank of England today, the best example that we have today is that the Bank of England is auctioning off debt. They're going to be doing it the first 4 days of this week. So they'll be doing this through Thursday, and they announce the results of their auction in about an hour. Okay. And yesterday that was a drag on the markets. Okay. So that's not the only flow that is in the market, right? But that's probably the biggest one that we want to keep track of. And what we can kind of do is we can look at all of the different flows in the markets and what we expect they're going to do that day. And from that, sometimes we get a situation where there's a clear imbalance and we can take a trade, right? And that's the way that I approach it, right? Did you try the market make? Are you talking about Gary Norton's market maker manual? So, because yes, okay. So I haven't done his new course, but I'm pretty familiar with the content from his old course. And I'll give you the lowdown here, okay? Because he's very good at, you know, making it seem very cryptic and like you really want to know, okay, what is it that he's hiding? But basically what he's doing is he's trading correlated assets is essentially what he's doing. Okay. But there's a lot of valuable insight into how he approaches that. So, whether it's worth X $1,000 or whatever, that's up to you. Although he does have a much cheaper course now, right? So that's good. But I haven't done the full thing, so I don't know. I tell you, if you're starting out, his yellow jacket course that you can do for free, everybody should do that, man. Everybody should do that. And I expect all of you to get 100% because I got 100% when I did it. So anyways, how did I learn to read the DOM? No BS day trading. Trades, Quotes, and Prices, Markets Under the Microscope by Jean-Philippe Bouchot. and reading studies on my own, and then about 5 years of screen time. And I think that for 5 years of screen time is the most important. That really, you really learn a lot from just watching the order flow. And I think that the thing that really kind of will give you a leg up from your screen time that a lot of day traders don't do, so start doing this now, is come in. So you ever watch Futures Trader 71? Futures Trader 71, he comes in and he goes on the chart and he says, well, I have scenario one where it goes up to here and then it comes back down and then it goes up here and yeah, right? And those are and then at the end of his day, he goes and he looks and he says, okay, which of my 3 scenarios happened and how did I play it and how did I do, etc. Right? And that's how he kind of approaches markets. Well, so I am, the approach that I take is that that's noise trading. And it's not that you can't make money from noise trading, but you're a lot more likely to lose money from noise trading. So we want to be an informed trader. So we do the same sort of approach, but we're doing it with expected flows. So we come in the morning and we say, here's a flow that I'm expecting. Bank of England is going to be selling. There seems to be some sort of buy flow here today that I'm not sure what the origin of it is, but there was some buy flow here before we opened in the morning. And then we've got the election. So those are 3 potential order flows. Although with the election, I'm not sure which way it's going to go. But that is a flow. I don't think that that's going to be a huge flow in the treasury market today. It could be a buy flow in the equity markets. Okay, right? So we come in and we mark all of those flows. And then at the end of the day, we do the same thing. As we say, okay, what were the flows that we were expecting and what were the flows that we actually saw? And I thought that the election would be a buy flow in equities, but it ended up being much more mixed, or whatever the deal is, right? And every time that there is a major move, I want to be looking and saying, what were the possible drivers of that order flow? And I can come up with theories about what were the possible things that were going on. And then as the market develops, you might get more information that can help confirm or deny some of your hypotheses, right? Because the reality is that every major move that we have, there was a flow behind it. And now that reason may not have anything to do with fundamentals, okay? But there's always a reason behind those flows. And the more we can do to try and figure out what is driving those flows, the better off you're going to be. And that's where, 5 years of experience starts to become very, 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 very powerful. Futures Trader 71 is a super trader, and he is a YouTuber too. So I don't know what that's about. But I am just a regular guy trading here on the market. I think that I can give you a lot of insight that, whether you're just starting out or you've been struggling, I can really help you see the real game, okay, in a way that a lot of other creators don't understand, to be frank. A lot of other traders, they are still stuck in being noise trader Ned. They're in the, okay, if I set my risk this and my reward this, and this is how I'm going to gain my edge and so forth. And I mean, there are tricks that you can do that can kind of help you from certain perspectives. So for instance, scaling out of your trades, like all in and then scaling out, can really help your psychology, right? Because it makes you feel confident. It makes you feel like you're winning. Okay. But the downside of it is that, you will come into a period in markets where it gets really volatile and you get the full stop hit multiple times, right? Then you blow out, right? Because it's the probabilities, it's the noise, and you're just kind of setting yourself up with a strategy that has a fat tail, right? What is the real game? The real game is that there are flows that you can predict, and we want to find something. We want to find information that really predicts which way it's going to go. Whether it's from news or information about an institutional strategy, information that we might be able to glean from options about people's current positionings, etc. Right? There are things that we can do that are actually predict future order flows. That's the real game, right? And that's the advantage that I can give you. And I can, I can show these things to you in some of my videos from a quantitative perspective. That's the advantage that I think I give you, right? Does that guarantee that you're going to have success? No. Do I have like crazy success off of it? I'm doing okay this year, but no, I don't have crazy. I'm not a millionaire from trading. I just, I do well enough that I get to keep going. And I'm pretty happy with that. As long as I get to trade, I'm happy, right? And I would recommend that's the way that you trade it. If you notice, I am no respecter of persons, right? I mean, if Jean-Philippe came in here, I would be like total fangirling all over him, right? Because this guy is my hero, and I've learned a lot about order flow from Jean-Philippe Bouchot, right? And the people that I tend to respect are not people that will talk to us on YouTube. They're people that would probably love to talk to us on YouTube, but they can't because of who they work for and stuff like that, right? Those are the people that. But if they were here and they said something like, "Oh, you should go long here," I'd be like, "Why? What's the predictor of order flow that you have? What kind of information can you empirically prove to me some information that suggests that it would be a good idea to go long here?" Right? No respecter of persons. What do I care about ultimately? I care, what can you show me that you can empirically prove will help me predict the market? And if they don't have that, it's like, who cares? Who cares what this is probably a flaw of mine. I don't give a shit who's who, right? What like the worst thing that happens to me, I tell you what, like not the worst thing that happens to me, but the worst thing that people attempt to try with me is they'll come in and they want a sponsorship. This happens all the effing time, man. It's like these cryptocurrency bros will come in and they want some sort of advertising on the channel, some sort of sponsorship. And the way that they try to get that is they try to emphasize like how big of a deal they are. I don't give a shit. I don't care who's who. I am not a person that is commonly starstruck, right? Because, and why is that? Well, because the main thing I've learned that helps you from a psychology philosophical point, right? Because everything that I've talked about up until now about order flow, that's all stuff I can empirically prove, right? But if there's a philosophical take that I would give you that'll help you in trading, it's this. What matters is knowing what you don't know. The market exists because we don't know everything. It's impossible for one player to know everything. Each player has a different set of information that is necessary for the pricing of a security, and we have a market so that all of that information can come together and we can make and at least attempt to make a fair price, all right? And the price does not end up being reflective of all available information. It's mostly reflective of the orders that are put into it, and it doesn't reflect all available information unless you go out to like a high time frame, like a couple of years, like 3 years or something like that. Okay, but you can make money. You can come in, you can be aggressive, you can be really confident, you can make a ton of money, and then you blow it all the time. How do you keep it? It's knowing what you don't know. It's being able to come in here today and say, well, I don't have any piece of information that suggests to me that there's going to be a flow that's positive or negative. Yeah, there's all sorts of chart patterns that I think I see, but I've gone and I've back tested all of those, and it shows that those are just a wash. So I'm just going to ignore that, and I'm going to wait for information to come to me that suggests which way it's going to go. Right? Know what you don't know, and then you're not taking trades when you don't know what's going to happen. The humility is what matters. And so every time that we come in and we say, so-and-so is a profitable trader, so I can trust everything that they say and they're golden, I think it's a mistake. I think it's a mistake. You shouldn't trust anything that anybody tells you unless they can empirically prove it. Right? So there's lots of people out there that have had success and they don't know jack squat. I don't think that's Futures Trader 71. I think that Futures Trader 71 understands the market a lot better than that's kind of. I wish that he spent more time talking about what are the new? What is the news, and why did it move in this particular? Because he understands that stuff really well. I think that was a large factor behind his success. But I also think that it was the humility. He understands that, like, even if you have a technical setup. So yes, I've watched all of Future Trader 71's webinars, and I learned a lot from him at the beginning, right? And he would go through this whole thing about how you manage risk and everything. But then he was like, at the very end of the day, like, they're just patterns, and patterns tend to, like, disappear, and like, there's no real answer to it, right? and that's why the only real edge that we have is being able to manage the risk, which is, you know, from that approach is correct, right? he knows. I'm just trying, so it's not a knock on Future Trader 71. I'm just trying to point out the approach that I have that's different, that I think is going to give you an advantage. Yeah. I'm not a millionaire. ... from trading. Listen, I do okay. Listen, in my office, I have wainscoted walls. Okay, I'm not poor, although I do feel a little poor last paycheck. Good grief, this inflation is nuts, man. I'm a little concerned about how the winter is gonna go. But you know what? I can start wearing sweatpants and long sleeve shirts. We can turn the temperature down 10 degrees. We'll be fine. Man. But no, I am a software developer by day, and that's a pretty good gig. I need to start thinking about, I don't think that now is the time. You know, I didn't want to do it the first 6 months, a year of having another baby, but depending on what my work gives me for wage increase next year, I might need to think about more seriously about moving somewhere, because I'm worth a lot more than I'm getting paid. And I really wish that I could find a position that took more advantage of my work for somebody else with my market knowledge. I digress. Yeah, I don't see myself moving outside. Listen, if somebody came to me out of the blue, because I would have no clue where to look for a job like this, but, you know, if somebody came to me out of the blue, you know, and said, hey, we're JP Morgan, we want you to trade for us, then I would move. I would totally move. But it would have to be something like that for me to be able to convince my wife to go. And it would be difficult because we would have to convince the ex to come too. Although if it was like moving to New York or Chicago, I think we could do it. I think that they would rather live in a place like New York or Chicago than Utah. The ex would. Okay, so anyways, Jotaro asked, do you think bookmap is useful, or should I just stick to the DOM and the footprint? Okay, so I think that the DOM is the most valuable tool by far. Even the footprint, there's some information that you don't catch, because the thing is you want to see the flows as they're coming in. So, you know, like just right now, we ticked up 2 ticks. It was 662 and then 941. Now they're starting to nibble into 27, right? And you can't see that in the footprint because the footprint just aggregates too much information, right? I think that the footprint is really valuable from like a high level perspective. So the same thing with the bookmap or Vista charts, right? So they're pretty good from like a high level perspective. But what the bookmap does is it makes you over focus on the big orders, right? Because that's basically what it shows you is where large orders are positioned, right? And so that's why I really think you want to watch the DOM and you want to see every time that it ticks how much is trading, right? And then you can see shifts. So what you're going to look for is this, okay? Or some of the most important things that you want to look for are this, okay? Are there signs that like the market orders are like in balance? Like there's a lot more buy market orders than there are sell market orders? Are there signs that the liquidity providers are feeling a little bit of stress? Like they're starting to cancel their orders, like it pushes up and then they don't want to hold any liquidity at the next price, you know, that those sorts of things matter. And then I'm looking for liquidity holes. So what you're going to see is you're going to see a price where neither buyer nor seller wants to put a lot of liquidity there, and it will trade back and forth across that price many, many times. And this typically happens after a large trade or it having been stuck in an area for a little bit. It creates like a liquidity hole that makes the price stuck. Okay. So a lot of volume could trade in that spot, but it's hard for price to move away from it, right? So when you see something like that, it takes about 45 minutes for that to heal, and then you can move on. So if we're getting a meta order, I want to get in, like if I'm buying, I want to get in at the lower end of that, right? And then after 45 minutes, well, and I would rather, I would want to do that towards the end of that 45 minutes. And then at the end of 45 minutes, you might get another impulse, and that's the sort of trade, like, when you get like a strong trend and there's like bull flags, that's basically what you're looking for, is you're finding the spot where the bull flag is going to form and come back and try and get it long there. Okay. But just remember, the pattern doesn't predict anything, right? It's really, if you're predicting right, you should be able to predict the pattern that you're going to see. But that, that we had one leg up and a bull flag doesn't mean that it's going to turn up again, unless you have something that says that there's more flow to come, that the overall change in cumulative delta is not enough given the flow that I'm expecting, right? Yeah, people didn't know the methodology in depth and how to trade futures market logically. Yeah, I think that people, retail traders, for whatever reason, are much more interested in the technical analysis side rather than understanding what's actually going on in the market. Understanding the business, understanding the news and fundamentals, like there's way more edge in that. There's the informational edge is abundant in everywhere. It's less reliable, but it's abundant in everywhere, and I think you stand a much better chance as a retail futures trader having success off of that than you do focusing on chart patterns, right? Or even technical analysis of order flow, right? Are you from? Yeah, I'm from Utah originally. In fact, I live like a block away from where I grew up. So we moved when we were looking for a house. We were like, well, we didn't like the schools where we were, and we knew that the schools were good in Davis County. So we wanted to be in Davis County, so we found a house that was like right next to my parents. Book map is great for thinner instruments, low volume oil / tags. Yeah. Let me put it this way. If I'm going to have a chart up, that shows me order flow stuff, the most important thing to me on that chart is going to be cumulative delta, not the market depth, right? Market orders are a really, really important part, right? But you need to be able to see both. You need to see both the market orders and how the limit orders are interacting with them. Because an informed trader, from the metrics that I've seen, it suggests that informed traders use 50-50. So you are going to want to be looking, if we're looking for a buy, we are going to be looking on the bid and seeing, okay, yeah, the bids are absorbing, the offers are pulling. That's in line with what we're expecting to see based on the order flow that we want to see. Yeah. Draw the tits. No. He wants me to draw the picture of how a liquidity hole forms because it looks like tits. Now, as for thinner instruments that TLA is talking about, we really need to pull up like maybe oil with right? That would be interesting. But I don't know. So I have room here. I could fit 2 more DOMs on this screen, but I feel like that people appreciate having the chart of the S&P 500 up. S&P 500's not looking too shabby today, is it? or we're coming into the time period where we tend to see some flows. We did see one a little bit earlier already, so to the long side. So it does look like now the treasuries are stuck, right? 26 out, 27. That's looks like there's a pretty decent liquidity hold. You see, like, so like they're polling at 26. They can take 26 offer, but like there's like zero interest in trading here. So again, if I wanted to buy, I think that this spot, like if I could get filled at 26, if I wanted to buy, that'd be great. But I don't think that I have enough to predict which way the flows are really going to go here. In fact, I think I'm a little bit worried. I mean, it's not going to be for 45 minutes, but I'm a little bit worried about having another sell. Thing is, we had a strong corporate, corporate issuance yesterday was high. I don't know if that's the case today. Yes, chart is fine, but I don't think that many micro yield. No, yes, they are 100% necessary because I might actually trade on them someday. I do keep track of these, believe it or not. I do watch these. I'm always watching that 5-year. It kind of frustrates me that the spread in the 5-year is so wide. I guess if I want to do a spread, I got to do it 2s and 10s, but that's kind of what I watch to try and strategize if I want to take a spread trade. It's just been a long time since I really felt like I had a good setup for a spread. Otherwise, I would try doing another swing with it. Or rather, I think I've gotten to the point where I could try doing another swing with it. But like, here's the thing is that before I had those micros, I just had the treasuries take up the full screen. So, right. Yeah, I could get rid of the 5. But like that's the thing is that these 8 are the only ones that I'm interested in looking at. Right? I put the 8 and then I have to have the dollar index up there. The dollar is really important, okay? But this whole square up here, that's free room. That's free room. And we chose to put a chart up there to make newcomers feel more comfortable. Is that the right choice? I don't know. Probably doesn't matter. Right? It seems to me like most people load it up and put it in the background and just listen anyways, right? So probably doesn't matter what I have up there. Well, I almost wonder if it's like listening to me because I say, well, but I don't know if it's a buy. I am a little concerned that it's a sell. And 2 ticks down. 2 ticks. I'm reading too much into 2 ticks. It's a slow market, and that's when it's a slow market, what you'll tend to do, and what I definitely tend to do is like overread into every teeny tiny little move. 2 ticks down, does that mean anything? Probably not. But it's like the only thing that we have to talk about right now. So it moved 2 ticks down. But it's a slow market. That's the right choice, yes. Let's see. I think, well, I don't know. One of the things is that, like, especially when it comes to streaming, one of the things that's going to make you, successful or not with streaming is your personality. I don't feel like there's anything particularly likable about my personality. To be honest, I don't really understand why some people have these personalities that everybody likes. I don't get what makes that. You know what I mean? And I, unfortunately, I'm constantly put in the place where, in order to help you out, I have to tell you things that you don't want to hear. Well, the treasuries are pressuring the downside here a little bit. Let's see if they break the 22 area. They are neurotypical. Wink. Yeah, that's what I'm not neurotypical. They're ergo. But you know what? There are a lot of quote unquote ADHD people that have been extremely successful with that sort of a thing. There can be things that can be quite because a person with ADHD, you know, they're constantly looking for that dopamine stimulus, and so, you know, if they get good at doing that, then the people that are around them, they're constantly getting the extra dose of dopamine stimulus that can, you know, so they can kind of be magnetic at first. But the problem with the ADHD person, that's, you know, so I think a good example of this is Jenna Marbles. She seems ADHD to me, and you, when you watch her, the beginning, you're getting that super dose of dopamine, right? But people get bored of it over time. That kind of a stimulus only does something for you for so long. Well, that's why I think that the markets are the ultimate stimulus. Markets are the ultimate stimulus because it changes every day. And there's like real stakes. They're some of the highest stakes, some of the highest competition, right? So in terms of like a possible norepinephrine dopamine stimulus source, there is no greater source than the market. That's why so many ADHD people are attracted to it. I don't know. I think the part of the other problem is that, you know, the approach that I take here is I want to help traders get better at trading. But the reality of the situation is that the majority of traders are going to fail regardless of what we do. So, you know, a lot of people are going to come in, oh, I'm super interested in trading, and then they hear, yeah, well, it's not actually that great of a gig. You know, they go, oh, okay, they go find something else, right? Or we're hurting ourselves in the long run. But I guess I'm not just looking for an audience that's just anybody. I'm looking for an audience that is as dedicated to understanding the markets as I am. And everybody else can just kind of benefit from the knowledge that we get. Yep. And it's you know, we were there on the whole time, weren't we? About rates are going to go higher. I'm not sure now. Like I look right now and I feel like that things are fairly priced, and I'm not so sure that the treasury should really be selling a whole lot. And every time that I see a strong selling come into the market, I'm kind of like, oh, I think this is kind of silly. I think that the pricing is pretty fair right now. But at the beginning of the year, like we knew the rates were going to rise, didn't we? We knew quite well. And we did take advantage of it. Not as much as I wish I had, but we took advantage of it pretty decently. So there is an advantage to watching us, isn't there? Trading election day, says Zero Hedge. Nah, no. Ukraine openly rejects reported White House pressure to negotiate. I wonder if the Biden administration is starting to think that, oh, everything would be fine if it wasn't for the Ukraine war. I don't think that everything would be fine. It would probably, but it certainly made things a lot worse. Not too much new over there. I think this is going to be a tough morning. From what we're seeing so far, I think that it's going to be a tough morning. They always blame something from Eastern Europe, don't they? It sure feels to me like Democrats don't feel like it's their fault, right? That's really what it all comes down to, is any time that something goes wrong and Democrats are in power, it wasn't their fault. It wasn't their policy. It was, you know, the Russians. Yep. Not that that Republicans don't do that either, but I think one of the problems that we have here is, again, like systems are really incredibly complicated. So when we do have a problem like this, it can be really hard to pinpoint it on one thing. You know, like a war in Ukraine shouldn't cause. I mean, we should be self-sufficient, right? But there's reasons why we're not. So like when you really want to talk about why are we in the position that we're in, there's like a trillion things that make it that way. Like we can talk about some high level, most obvious ones, but when you're trying to fix the problem, you often have to go a lot deeper than that, right? Oh, you just moved from Bulgaria? That's interesting. I'm gonna blow my nose here real quick. This is another thing that I think is interesting, is that I've always had a pretty large number of people on my stream that were more from Eastern Europe and from Europe in general. So what happens is there's probably tons of people here in the US that would love to come and watch, and even if they're not trading, they'd be interested in hearing me speak. But the people that are interested in hearing me speak are asleep. Right? They're not going to wake up early for the treasury market. So we get a stream that's more Europeans and the real traders, but not the jump to like a higher amount. All right, another issue is people prefer the ES, right? If I was trading ES, when I went back to treasuries, the popularity of the stream did decline. That's okay. I feel like that most of what goes on in the ES is just noise anyways. People would learn some things if you had a tick Y and Q and not ES though. I have a tick compressed ES up. You know what though? The thing is I'm not all that attached to my ES chart. I'm kind of like, screw charts. Nobody cares. Nobody cares. Here we go. Wait, where is it? How can we tell your synthetic dollar index is accurate? I guess you could open up TradingView and compare it to the real dollar index. I did a little bit of testing there. I'm pretty confident that it is accurate. Come on. Jigsaw's a little finicky with the little bit that lets you build templates. Oh, how much? Oh, the formula. I mean, listen, you don't need to get the formula from me. So the formula for the dollar index is prominently published. It's out there. What the hell? Did not like that. I'm gonna restart. Well, okay, so the value in the indicator, Lucas, is not in what is the formula for the dollar index. The value in it is how do you deal with adding 6 data series to calculate something. And even if I showed you the code, you probably wouldn't realize where the problem areas are. Because there's some code that looks like really simple, but I had to test a bunch of different things to like make sure that it worked correctly. And I've still been making improvements to it. Like for instance, the data, what you get when it's live versus historical is a little bit different. That's why I have my chart set up to show the old stuff grayed out, because you know, unless you're gonna load a lower time frame data series, you know, there's that granularity that you lose, for instance. So it's just kind of like all those sorts of things, and like minimizing the amount of data that you actually have to load is another thing, right? So that's why it's valuable. But I don't just charge for just that indicator too. I have the whole suite, right? But the whole suite is $100. If you want it, and I'm not going to sell the code. Sorry, I'm not going to share the code. But you can get delayed dollar index data from TradingView. Yeah, the lifetime license is $100. And you don't just get the dollar index, you get the whole shebang, including the... How do you not know this? How do you not know this? I mean, you can go to speculatorseth.com and it shows you all the stuff that's included in it. All of the things that I use. It was kind of funny. I was doing like a walk through the workspace. I just realized there was some stuff that I needed to add, because I do want to talk about tick compression, and I didn't talk about that in the video. So I'll have to record a little bit more and add that. But everything okay, I don't use everything that's in that suite. There are some things that are more experimental and I don't regularly use, but there are so many pieces in there that are my own. Like, it really is the case that like I can't trade without my custom stuff. Like, I had to build a lot of custom stuff for this to work. It is 14, right? And I guess I would, like, when I was going through it, and I was like, every little... Oh, it's 16. I was just surprised that it was practically every chart over there had something custom on it. I was like, oh, wow, I didn't realize that I was that... How much work I had put in. I didn't realize how much work I had put in. Oh, I hate it when it does that. Okay, but I think I know how you do that one. What is it? Good depth, maybe. Current type bid. It's this one. Maybe if I do have momentum tells. Oh, it was the momentum tells. Turning on the momentum tells is what's doing it. There we go. There we go. I'm not interested in trading NQ. I'm really not interested in trading NQ. Okay, here's the start. See, it's going to be distracting having it there, right? You know it's going to be distracting. Because it's constantly moving. It just kind of draws your attention. Man, even with the tick compression on, that thing sure moves, doesn't it? No, it's okay. You just trade them, and then when you have $100, then you can come in and you can buy my indicator suite. And remember, you can try it out for 2 weeks for free too. 2-week trial is included with it. So please put oil with 5-tick compression on there. The issue. So I had this thing where like I felt like I had too many DOMs up and that I was maybe slowing down my computer, because I had some periods where even in mildly volatile markets I was having trouble, right? But I think part of it was I had some other things running, like I had Glasswire running. Glasswires, that's a lot of processing, right? Especially when you're getting all that market data. So oh, I'm not getting it here. I need to come in here and download instruments and add the NYMEX, I think. That's what I gotta do. NYMEX update. Yep, it pulled 1,000, 2,000 symbols. Nas crack. I've never heard that before. How have I never heard that before? To compress the... No, why would I do that? That just sounds silly. That just sounds silly. The more I think about it, the more silly it feels. Oh. Did I cancel it accidentally? Wait, let's see if I got it. There we go. Crude oil futures December. With 5-tick compression. A. Not bad. I feel like that oil and the Nasdaq could be compressed even further. Okay, well now we've gotten to the point where the chart's got to go. I think I need to resave my template here, so let's do that. So appearance. Font size 16. And then the current at bid. Try to turn off tail inside bold. Need to cover all classes. Well, I don't think I'm gonna put gold up there, for instance, but we can have NQ and oil. Those are popular instruments for sure. Okay, let's bring this in. Gold is cocaine is crack too. It looks like on this one I need to add more depth. There we go. Now this thing looks more alive. It certainly does. There's definitely stuff going on now. Now I got a little bit of extra space. So I think that I should try and split the different, like I can make NQ a little bit bigger here, right? I think I compressed NQ down a little bit too much. And then I'm gonna move ES over a little bit too, and give its volume profile a little bit more space. There we go. We'll use that. You can fall asleep watching a stream of the US Treasuries in compressed ES, I guess. It's just gonna distract me. It's okay. I'll end up looking at my ES 1 minute chart more often too. That should be fun. Wow, ES looked really good before the open, but the first 5 minutes here in ES not looking so hot, and the treasuries are kind of in accordance with that, pushing towards the upside. Although I am getting a strong amount of what appears to be a spread flow in here, because when I look at the 30-year, it is like straight up sell, whereas the 5-year has been a lot more buying. And I do see this, the spread has increased between the two of them. So we were expecting the, remember, the Bank of England auction results come through in about 7 minutes. So And the baby's trying to break in. He's trying to break in. Why don't you? I don't know. It wasn't on the news feed yesterday, and then after it, I heard about the news squawk said something about it after the fact, and I was like, okay. But now I know. I have the inside scoop for you, Lucas. Bank of England announces the results of their auction at 9:45 Eastern time. They are auctioning off debt both Monday, Tuesday, Wednesday, and Thursday of this week. And yesterday, right about when we started to see the treasuries move down was when that auction happened. It's curious because when in Zero Hedge, they did their synopsis, because I think it was another one of those, well, why did we move down? That was kind of weird. It seemed like there was some aggressive selling with it and everything. And they said that there was a heavy corporate issuance calendar. And I don't know. I don't have enough information to know what the corporate issuance from day to day is, but yeah, I haven't seen news from Bank of England that come out of nowhere and is not scheduled. Yeah, because they scheduled the treasury auctions, but not the auctions for any of the other countries. Yeah, and it just so happens, but I mean, that's because it usually doesn't affect the market, but it just so happened yesterday that, in my opinion, it affected the market. I don't know, guys. I feel like that 10 is not enough on NQ, or 5 or 4 is not enough on NQ. What if it was 40? Then it'd be thick, right? Well, you're seeing some thick amounts trade here to the downside in the treasuries, in the ES, right? Like, it's not just slipping through; they're pushing through liquidity, and I think that the treasuries are bid because of how sad the S&P 500 is today. I mean, there's not much happening today, so kind of it doesn't make sense to me why the S&P 500 would have like a major move either way. One does have to wonder how much, so for instance, they get to 3,800 in ES. That's going to be a key spot with a lot of gamma on it. And then we can kind of see what they do. I don't know what the gamma there at that spot is, if it suggests that a break through that will accelerate things or not. But I'm a little bit weary about trying to jump on board this. It did end up being a buy in ZN, though. I think that is it going to be, we did try the downside and it didn't happen, and now we're trying the upside, and I am seeing some buy flows come in. So it looks to me like, or at least my current theory is, in the treasury market, not much flow coming through, and so flight to safety from equities declining is what's driving the treasuries right now. So I wouldn't say that the flow to the upside here, the flow to the downside in ES looks pretty extreme to me, although I think that it's going to take me a while to kind of get my my bearings right, and get used to this consolidated tape in ES. But it looks to me like there's some pretty aggressive selling flows in ES right now. I really don't know how you guys trade NQ. Good grief. Even with 4-tick compression, that's a little crazy. Nice, you're a little, well, Like the question is basically like, okay, so we know that it was to the downside in yes. How far is it going to go, right? I'm not too sure, because the thing that I keep seeing is a lot of absorption down here, right? A lot of overall volume. That could cause it to bounce. That could cause, you know, a liquidity hole that then pushes lower. I haven't found the there's a lot of noise in yes. What can I say? That offer in ZF. Oh yeah, up at 05. Good catch. Did that just get put there? Well, I don't have one. I don't have one of my alert things for ZF, so I wouldn't be able to tell how long it's been there. How long has it been there, Octavius? You can tell, right? It's been there all morning. Okay. Well. This spot right here. Well, I missed it already. Okay. Hey, thanks. Okay. This spot right here screams as she goes. Because it's so close to 110, right? I don't think that it makes sense to take it over in here, because you got like 116 and 4.16, and then you're kind of stuck. But over here, it looked like there was enough room to try and grab something. It's going well so far. Heavy bottom, yeah. Well, look, the bottom there, like the very, very bottom. Yeah. To Jay. Oh yeah, John. It's to John. Yeah, John Grady is. I mean, I don't think that he came up with that term. I think that he was using a term that the traders just already used. But yeah, that setup was just screaming as she goes, right? So I think the thing that, again, there tends to be a lot of liquidity at those even numbers. So if we're breaking a high and we're that close to an even number and we had momentum anyways, pretty good chance that we're going to touch it, right? I hesitate to call that like a technical trade, though. Uzi had a... What do you mean? Uzi's still here. Don't be talking about my boy Uzi like he's not here, Lucas. Come on. I'm not getting super good bid at 31.5, but I'm still feel confident that we're get our fills. You see that the offers aren't pulling there at 111, so they know it's going to trade. Oh, it's going to blow right through us, huh? Wow. I thought it was a good trade anyways. Now it's sitting there being like, Seth, you should have sold 4.16. I don't know about this. Why this does seem a little too much. Well, where are we compared to yesterday? Okay. So we're kind of approaching the range that we were in yesterday. Yesterday's high is 05.5. But our range from the time that we were trading here went to 110.005. So from 005 to 05.5 was basically the range that we had yesterday. You're thinking of getting Jigsaw? Congratulations. Well, if you do it, make sure you use my link in the video description. It helps the channel out. This was the only trade sign US Treasury. Yeah, that was the I've only taken a sim trade today in the US Treasury. That's correct. It's in the video description. Yeah. No problem. That's what I'm here for. Is trading is hard. Trading is lonely. And I'm here to help make sure you get started out on the right foot so that you have a much better chance of surviving. YM is rallying hard. It does look to me like YM is pushing a lot harder than ES is. Like YM has come back down from its lows quite a bit while the ES kind of chills there. The treasuries continue pushing. The treasuries are just like driving hard here, man. It seems like they really want those highs of the highs of yesterday. Kind of feels like they're just going to keep going, but they are having a little bit of a hard time maintaining the momentum up here. Oh, there was somebody on the channel trailer who asked me a question. Can you keep going? So I went to type something because I saw somebody had left a comment on a video. I'm like, let's answer this. And then I look over here at the treasuries. They haven't. They're all still only one tick away from the highs. They're gonna go. So I said 416 cast on it. There was at least 10 in it. This is a really strong... Did I miss something, man? Let's come in here. Talk of a halt and withdrawals at FTX. we are getting a further decline in the cryptocurrencies. I suppose that might, and we're getting a really strong buy in gold as well. I don't know, guys. This is a little weird. When did this start? It started after. Oh my gosh, I haven't even been paying attention. Okay, so what was the result of the auction? My news squawk didn't say anything about it, but I guess the auction must have gone well. Could it could, I mean, it's possible that FTX could be affecting things, right? I think a lot of people would want to think, oh yeah, what goes on in the cryptocurrency markets doesn't really matter. But if people are pulling their money out of cryptocurrencies and then dumping it into, safe short-term assets like the treasuries, right? That could absolutely kind of move the amount of volume that we're seeing. Absolutely. I don't have a whole lot. I mean, because it's something that's so like out of the blue and unusual, I think that we have to kind of leave that as a theory. But the other thing is that unbeknownst to me, or because I'm so ADHD, I forgot, we did have the UK auction, but I didn't see anything from the news squawks or anything about what the result of that was. So I assume that it must have been okay. Must have been okay. They did run up there, but I can see the treasury coming back quite hard. So I think that we'd have to say that was one leg of a meta order. I just feel bad for people who didn't have plan B and put everything into that without contemplating risks. The one who knew the risks and still bet. Yeah, well. So here's what I think is interesting about this one. And I think we kind of talked about this before. I don't remember what I said, but remember that day we talked. I think you were here that day, Lucas, when we were talking about Sam Bankman-Fried. And I was saying, well, when you have somebody in a space like that was that successful, then you have to be suspicious, right? Like I'm a lot less interested in the top performer. The top performer this year usually tends to underperform next year, right? They're usually doing something stupid that worked out that one time and they were lucky, And it kind of sounds like that. How did Sam Bankman-Fried get his fortune? Through a circular scam where they were taking out debt on their own tokens and then using it to buy more of the token. And they eventually got to the point where that wasn't working anymore, and then the market didn't go anywhere for such a long time, and they're one guy jumps ship and everybody pukes. And here's the thing that's crazy about a situation like that is like, okay, FTX being like, the rumors are all false, don't pull your money out, etc., 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 etc. No. Okay, listen. I'm just saying, let's say that we make a bank, okay? We make like a legit, I wouldn't make a crypto bank, but maybe it could be a crypto bank. But let's say we own a bank like this, okay? And somebody is spreading some rumor about that, we don't have enough money or whatever the deal is, right? I would just not say anything about it. Like I would intentionally, I would want somebody to come and ask me, to address the rumors and just be like, well, why? They're false. That's what else am I supposed to say about it, right? Because when you come out and you're like, oh, no, it's false. Don't take your money out. Don't take your money out. You know what everybody's going to do? They're going to take their money out because it's the game theory, right? This is the prisoner's dilemma, right? If you take your money out, what happens? You have your money out and you're safe. And if you don't take your money out, then either A, everybody else doesn't take their money out and you're all okay, or if some people take their money out, you're all screwed. So what is the best thing for you to do in that, for the individual in that individual situation? Take your money out. That's the prisoner's dilemma. And humans will do it every effing time they're going to take their money out. So it's to your disadvantage to be the big PR guy out there and say have anything about taking your money out, right? For that to even come out, that basically guarantees the collapse. So we've seen the exodus now, or we're seeing the exodus now. Happened overnight. What happens next? Do they actually fall? Do they actually go kaput, or what? Is it going to be interesting to see? Because if they do go kaput, I think that we could have 8,000 in our future in Bitcoin. Wouldn't that be fun? Wouldn't that be fun? Probably a lot of people don't think it's fun, but you know what? I think it's fun. I relish the crypto tears. I really do. Not gonna lie. I love seeing the cryptocurrency market lose money. Mohammed A. L. Arian pointing out that revolving credit increased at an annual rate of 8.7% to 1.162 trillion in September, the highest level on record. Think it would end an entire generation of wannabe traders? I don't know what to tell you. He knows, Lucas, you know exactly the thing to say, right? Because he knows that I want to help traders, right? So I would not want to see an entire generation of traders get wiped out. But I think that most of these things that are being put out there are tokens, are securities, and should be registered with the SEC. And I think that that DeFi is basically banking and should be regulated the same way that all of the other banks are. And I think that the whole thing is just a dangerous scam designed to suck money in so that one small group of people can take all of the money and everybody else gets left high and dry. And the sooner that people realize, and like this whole thing that like Bitcoin is a hedge against inflation, or it's where it's a new asset class that you can use to save your money during these inflation, total nonsense, and it's messing the markets up, and I want to see it gone. And then once everybody has given up on it, then maybe I'll dump a little bit of money into it. Then maybe or I'll just continue to wait for Garlic Coin to have its eventual day in the sun, right? Because you see, Garlic Coin is really truly like digital gold because it has a small supply. And most of it's already mined out. Most of the Garlic Coin is already mined out. Someday, and then I'll go on Twitter and be like, hey guys, I think I'm the first Garlic Coin billionaire. Except for I will actually sell. When I become a billionaire, I will actually sell, and then I'll tweet about it. So that when I go on Graham Stephan's show, he'll be like, so did you sell? Of course I sold. I know what I'm doing. I'm not some idiot. That's what's going to happen. I can see the future. I can't see the future, I wish. That's the dream that I have in my head, though, about Garlic Coin. Someday. Man, corn is taking a beating here this morning. So looking at our, top winners and losers, okay? Natural gas, the biggest loser with negative 6.12%. Followed closely by oil, not followed closely at all. It's oil is only down 0.71%. So most things are still positive. Okay. RTY is down 0.03%. Now, you didn't have to apologize for managing nothing. Don't apologize. Apologize for fucking up the trade. Don't apologize to me. Apologize to yourself. Well, here's the treasury back at 110. Can you imagine? I took that trade from here to here. It went that much further. I'm surprised. I missed 8 ticks on that. I would have if you had taken my offer of using it. Oh, man. Well, it's like I always say, keep track of all of your stats, and then 5 years from now, show me and we'll start a fund. And by that point, I'll have all of the necessary stuff so that we can start a fund. We can do it. And in the meantime, save up as much money as you can, because the more money that you can contribute to the fund, right, the better off, right? Because then you have more ownership in it, right? There's a lot of people that they go and they start a fund, but they didn't really have very much money to contribute to the beginning, so they basically end up, giving it all to somebody else. You think you're exploiting liquidity? So how much? I guess you're doing it on NQ too, huh? Still, we'd have to know how much you can size it up then, huh? And in for this market, it might be only like a handful of contracts because of the number of contracts that are just resting. Okay, that's interesting. There was a little jump there in the S&P 500. Forex Live tweets, just 20% of adults say their wages have kept pace with inflation. More wage pressures coming. Yeah. So you're doing it with the LTQ column. Is that what you think your edge is? Well, okay, so let's what do you have? I mean, obviously not 5 years worth, right? But what is your average risk to reward ratio? Or rather, what is your R factor? And what is your win rate? Or you could put it as, here's my average winner, here's my average loser. They're starting to turn up again. I feel like that if I wanted to try and sell the micros here, that 4.15 would be the place. Probably the best I'm going to get. I don't think I'd get 1.6. Although what I see here is a pretty strong flow came in pushing us up, but it was, the flows coming back out were pretty strong too. It kind of looks like a short-lived flow, and I still just don't know what was driving that. You're taking more, so you're saying that your losers are larger than your winners, basically. Ergo, I can't really determine how your risk. Well, I mean, what I care about is the risk to reward ratio and the win rate, right? To determine how much of a chance there actually is edge in it, right? Because if you come in, win rate is really high. So like if you're coming in and your risk was equal to your reward, and you were winning 70% of the time, then I think you got something. You might have something. I'm kind of surprised. I'm still quite skeptical anything that's based on the LTQ column though, because I really don't think that the size of the last trade at that price really makes a big difference. whether it was a clear, maybe make the difference. But and even then, I don't know how you would trade that quick, especially on NQ. But I guess a strategy of that kind of a nature, you're more likely to work out on NQ than anything else, right? Yep. Forex Live says US 10-year yield moves lower. USD JPY follows the move as it trades to a new session low. So yeah, we got Japanese yen pushing towards 145. Carl Quintilla, crypto exchange FTX exchanges in-house token extends losses. Last down 32% at 1503. I think the evidence is mounting that this may be driven by the FTX thing, huh? Even the best DOM and LTQ implementation won't be able to properly follow each print. Not quite sure I completely follow. I mean, the bigger issue. So here, let's do this. Let's turn it on. Let's turn on the LTQ so that people can see what we're talking about. Or shall we have it do it like, well, let's see here. Where do I do it? I think you do it in the price column, right? No. You don't want to accumulate trades at price, right? With the LTQ column. There's a way to make it so that the LTQ column takes over the price column or the volume. Oh, it's the volume profile column, isn't it? Volume profile. Maybe it's this one. Come on. Yes, LTQ. There you go. Yeah. So that's what he's talking about. So I would have to assume that it has something to do with if you see a large number in LTQ under a certain situation, then you take a trade. Yeah. Because most of the time the LTQ is just going to be one or two, because the vast majority of the orders that come out into the markets are just like a few lots. Like even in the treasury market, it's a few, like, because even the big algorithms that are trading like tons, you know, those algos split it up into a bunch of little lots so that you can't really tell, you know, makes it more difficult to piece together what's going on. I turned it on and yeah, it was NQ. I did it on NQ. I'm surprised the ES is not firing off due to the falling dollar. Well, I mean, ES isn't doing terrible though. Yeah. But setting that aside, those prints might not be accurate at all in one of the fastest markets around. So where I find there's a problem, I actually, So I think that the LTQ column would be based on the matches feed though, right? So like if you had like 20 contracts in line and like the first 5 contracts were all 1 lots and then the last one was a 15 lot, and then LTQ traded, and LTQ would show 15, even though the market order that took that out was just a 20 lot market order to hit them out, right? I think that's what LTQ is showing, the way that LTQ works. Last traded quantity. So if you're coming in here and you see a big number on LTQ, it means that there was somebody sitting there on a big guy sitting on at the end of the queue, is what I think it means. So I don't think that it's the same thing as what was the last order on the consolidated tape, right? Well, I tell you what, the upside here in the treasuries was pretty crazy, and the dollar is falling pretty hard. But when I look at a chart, I think the winner here is silver, up 2.76%, followed closely by copper at 2.21. Forex live tweet stocks are being sold to buy lottery tickets. Yeah, it's always a little sad to me when the lottery is like popular in the zeitgeist. Maybe they show LTQ at precisely that price and skip the other ones that you can press. That would make sense. But I don't know what you mean by that. But okay, let's see if we come into like maybe Jigsaw has some more information about the LTQ, and I can find in here. Depth and sales. Last traded quantity. We have a video about it. Well, News Squawk is noticing here that the dollar is falling. I'm wondering if, it could just be related to the election, right? I think we need to ask Jigsaw. Here. What time do you think the next look? That's a good question. So if this is going to continue through, and given the way that this is working, well, okay, so actually I think we have to take a step back first, because the question would be, is this like an organized meta order, or is this a market like panicking in one direction, right? Because when you have a market panicking in one direction, you don't get as much of the break, right? Like it'll go early essentially if we're seeing a market in panic. And I think that could be the case here in this situation. Like when I look at the dollar, for instance, the dollar is just falling and it's not stopping, right? The treasuries, they're kind of getting stuck by this liquidity hole, and they keep getting sucked back into it. But they're still kind of pushing as well. So how long would it take? Well, if we say that the first meta order ended at 754, that means that we could have another 15 to 30 minutes of sideways action before the treasuries take off. But I think the risk here in this situation is that it does so before that, or it reverses. So the problem is there's definitely has been one leg of a meta order for sure. It's just we're not really sure what's driving it, right? We're not really sure what's driving it. So that means we could take 4.15. It's just it's quite a bit more of a gamble, right? It's quite a bit more of a gamble. High hose silver. It really. Okay, UK and EU are nearing an agreement in their long-running Brexit dispute, and the EU has begun testing UK data on goods moving from the UK to Northern Ireland. Martin Shkreli tweets, "Well, hello there." Martin is gonna tweet is on the Twitter. He is on the Twitter. This is I'm curious. The trade is really obvious to me. I mean, the price is really obvious to me, at least. Somebody decided to take it with 9 contracts. Jeez. I think it's the election, the Fetterman effect. Okay, so if it's the election, what is the driver that maybe they're speculating? What is the thing that makes them? Why are they trading it the way that they are? Why are they selling the dollar? Flight to safety, yes, but the dollar is dropping, right? So they're not flying to safety in the dollar, they're flying to safety to the treasuries, right? Or they're taking their money out of the dollar. Man, okay, now the equities are starting to go a little crazy, huh? So this is exactly what I was saying, is if this might be them panicking, so you might not get the full weight for the meta order, right? And it looks like that's what was happening, because we did get another big block of buying come through in the treasury. It's going too quick. So in a situation like that, what can we glean from that? Well, one thing is that you're much more likely to get like a trend day off of that sort of a thing, but you're also in a position where that flow can reverse on you very quickly. So it kind of raises the stakes of the trade, right? It keeps showing size in ZF. Well, that big order at 07.5 was the original big order that you were looking at, right? I don't recall anymore. Seems like you'd have a good chance of seeing that trade. Should have taken the 415. I would be feeling pretty hot right now if I had taken that, right? It's the second big one. Okay. This is seeming a little messy. Like, they did break out by like a tick. They broke out by a tick. Only 36 traded there. They're falling back into the liquidity hole again, right? So that makes sense. Normally you would see, okay, there's a liquidity hole. They chill in that area because it's really hard to get out of it. And then after 45 minutes, the liquidity hole is filled, and then you get another leg of the meta order. In this instance, because it's people panicking or whatever the deal is, or speculators trying to jump on the momentum, I don't know. They tried to break out before the liquidity hole was filled, and what happened was they got one tick higher and then got sucked back into the hole. Now that doesn't mean that it's done. That just kind of tells you a little bit of something about what's driving this. I don't think that this is, well, one guy needed to buy a lot of treasuries today. Like maybe France wants to buy a ton of treasuries today, and they're just, they've got their setup and we just happen to catch them. No, this is like some sort of speculative panic trade, probably based on the move here in the dollar. But the dollar is retracing quite quickly here as well. So that doesn't mean that we can't trade it. It just kind of raises the stakes for us a little bit if we're going to take a trade. So got to be smart about this. I heavily suspect, though, that it's like preparation for the elections. Like, you don't want, maybe like, so for instance, here's the scenario. I think that the Republicans do really, really well. I don't think that they're going to pick up 4 houses. That, like, somebody were saying that it would be like 54 Republicans in the Senate. That seems a little bit too much. It might come really close. Like, what if the balance of the House, the balance of the Senate, what if the balance of the Senate comes down to who wins in Pennsylvania? And Pennsylvania, they're not going to be done counting for days, right? And in that situation, do you want to be in the dollar? No, you don't, because that would, or showing on the country in the elections would be a sell the dollar event. So if you're hedging for that, you take your money out of the dollar, right? So that could be driving it. But then why the treasury's up? Because the treasuries have kind of been following. Like when the dollar moves up, the treasuries move down. But now the dollar is moving down. Okay, let's see here. Let me say that again. The dollar was moving up. The treasuries were moving down. So now it's the opposite. Okay, maybe that is in. So it's not a flight to safety trade as much as it is a dollar trade, right? So sometimes you can get the situation where the dollar goes up and the treasury goes up with it, like when the dollar is a flight to safety trade. But if they're fleeing from the dollar for safety because of the elections, then maybe that makes sense. Or just the inverse correlation has kind of been the thing, right? Is the 30-year? No, that doesn't quite make sense. I'm a little confused as to why I would maybe be getting 4.155 right now. And how much time do we have? 30 minutes? Oil kind of looks like they could do something here. Is it down or up though? I've been thinking about oil a lot because earlier in the year I did catch a bit of oil and I said, well, I don't know if there's more, but energy has been like the only sector in the S&P 500 that's been up. So I probably should have taken that money and put it into ExxonMobil. But does it make sense to go into them now at these elevated prices? I'm not so sure. I'm worried that, you know, if we have a really difficult winter and like further downside in the S&P 500 is in store for us, then you're going to see lower prices in oils too, and it could be painful. So I'm a little worried about that one. Okay, I don't know what Nate Silver's talking about there. Something about hedgehogs and foxes and entrepreneurs, but I didn't get it. There's a little bit of sell pressure there in the 5-year too. You know, we did see that the flows were like, this was a steepening flow. We did steepen, but only a tiny amount. It really did kind of move all together. So that really makes me think that it was really mostly about the dollar. Although I have to say also that the treasuries took their really quick big rise there before the dollar. I'm honestly kind of tempted to reverse this now, but I think what I should say is that we missed the flow, and I'm not sure if there's going to be another flow. So I'm worried that if I do take a trade here, that it will just kind of continue to, you know, chop here. And I also don't think the liquidity hole at 110.01 is done. So Brock could be another 5 to 10 minutes. Spoos don't care though. Spoos just want to buy this mother. Okay, so I'm gonna reset them right there. Seems like it's flattening, so oh, there was a new Pokemon trailer today. That's funny. Forex Live tweets another round of broad pressure hits the US dollar as bonds catch a bid. President Macron, the United States Inflation Reduction Act violates World Trade Organization rules. What part of it? Oh, I'm interested now. The dollar is falling across the board, and it's not entirely clear why. There's some risk appetite creeping in, but stocks are hardly running away, with the S&P 500 up 20 points. Bonds are bid, so that adds up, but the strength of the dollar move is more than what you'd expect from yields down 6 basis points across the board. To me, this is a unique USD move. Looking to the Fed, the terminal top is still at 5.09, which isn't far off the peak. A 50 basis point hike on December 14th is at 67% compared to 33% of 75 basis points. Adam Button from Forex Live tweets. I think he's right though. Like I think that it must be a currency specific move based on the election. Let's tweet. Let us tweet. Twitter is the worst, but also the best, says Elon Musk. Let's see if anybody has any opinions on that one. $38.39. Oh, I didn't see it. They just busted out there though. Pretty clear breakout. Now, how is this in ES? Okay, so if we're talking like free FOMC, let's say 38.50. So 38.50 is kind of the next is a spot that I think we should be looking at. Dun, dun, dun. They weren't able to get to 3,800. I tell you what, if this election ends up being like having drama afterwards, because of some key recount or something like that roils the markets, I'm gonna be coming back and looking back at this day with an awful lot of suspicion, right? Because this flow seems a little weird to me. So you know what? They came up, they gave me some good prices at 4.155 and I didn't take it. Now that it looks like they want to break out again. At this point, I'm not sure if I could still take one, but I'm a little too pansy to hit into the bottom there. So somebody else did it already. I could join him. Be like, the market makers got to be like, do it, Seth. We got way more to come through here. That's a strong bid at 0.4.5. That's a little suspicious. Everything else seems to match up with it, though. I don't know, man. That's a little... And they're not just buying at 0.5? That's weird. That doesn't seem to make sense. It is going to be it's trading some size here now at 0.5 after there being a big bid below it. Like it's setting up like a spoof, right? Although I don't think that a spoof in this situation makes much sense. So I'm just really suspicious. It could be push and pull. Like, I think this guy in the 5-year does want to get filled. I need to put myself here in do not disturb. See, and then 04 half, they trade through it. The order didn't pull. Hmm. So was that 04 half? 04 goes offer. There's still absorption on it. I'm wondering if you get 15. Clearly, if I had hit at 4.14, I'd be unhappy, right? I don't think the liquidity hole below us is really a problem now, but I'm not getting clear signs of like another leg here, right? There's trade going through, but it's kind of suspicious trade. And meanwhile, the S&P 500 just keeps climbing and climbing. This is a pretty decent looking trend up in the S&P 500. That 07 is up there now too. So I just want to note that the place that they're running into the resistance, let's call it, is right at yesterday's high. They didn't bust it. So I'm gonna bet that they probably make another shot at it. But because I'm not seeing clear signs of another leg of a meta order, and even in the 30-year continues to sell, by the way. Well, it could happen because the dollar's still moving. The dollar's still moving around. I'm really concerned about this falling back. I wouldn't surprise me to, I mean, 110 again is actually probably still pretty likely. But you know, something that completely retraces this back to like the open even isn't out of the question. Notice that they're not giving me 415. Japanese yen is making another push here. So I'm seeing the 6J move up. I'm seeing the dollar continue to drop a little bit here. Treasury is quieted down considerably now at 04. Spoo's still pushing. Spoo's still pushing. Okay, well, we don't have like any big news at the top of the hour or anything like that. Bank of England still is speaking at the top of the hour though. And at 11, we do have a 3-year no auction in the treasuries. Interesting day. I would have thought me too, Octavius. Well, I think that I came in and I made actually a much more bold prediction than I realized that it was at the time, which was that the market wouldn't do a whole lot going into the election. Because again, here, I'm kind of thinking that there's not going to be too many surprises for the election is kind of my thinking right now. I think the Republicans are going to take things. They might even take the Senate, and then it'll be gridlock. But I did state that there's probably still likely to be some volatility overnight when we're watching the treasuries and stuff. Like I'm not planning on streaming tonight. I mean, we could do let's do a poll here. Start a poll. Will you watch join for stream tonight? Yes, no. You tell me if you can make it tonight. If you got plans, then just say no. That way we know how many of you, because I don't want to come in and just be all by myself. You know what I mean? But if you guys want to do a stream tonight, we could do one. I wasn't planning on doing it because I didn't think they would, but there's definitely going to be some volatility, isn't there? And I'm thinking that this move here in the dollar must have something to do with hedging for the election. And I think that, if I was a big bank or some foreign country like that, there's enough of a risk, especially with the way that elections have been going, about disputes around elections and stuff like that. There is enough of a risk there, I think, to justify possibly taking your money out, right? Okay, well, they did take a new high, and they were starting to shove to maybe get that 07 order, but they took a step back. So we'll see. Might take them a while to do it. That's the way that it's going to go. Looks like the 5-year is the one. Ooh, look, big bid at 077 in the 5-year. 5 years the ringleader, apparently. Okay. Not bad, although they didn't quite fill the big order yet. But I'm seeing the Japanese yen is just taking off here. This song has some good tension. It's given us some good tension here, don't you think? Iceberg ahead of the order. Oh, man. S&P 500 still. I tell you what, that is one crazy trend. Isn't it funny? Because the first move in the S&P 500 did not look good at all, did it? That makes it just that much more surprising to see how strong the S&P 500 has been this morning, isn't it? such attitude. Yeah, and then add some detune. Ooh, the big strong tick there now. 6.5. Still sold it, huh? Well, I do kind of think that this pressure will continue. It looks like, so we were saying like, well, when would we get another leg of a meta order? Maybe 8:30. It looks like it did come in right about actually where we originally predicted. I guess I didn't have enough faith, did I? Who was it that asked that question? I think I should have had more faith in myself, huh? I do think though that there's been a little bit of impulsiveness in this like some people are panicking and kind of going like, oh, something's going on, am I missing, I better catch on the train. That is happening. It was just in that particular case, it looks like that the liquidity hole was too strong, pulled them back. But you can see there they have broken yesterday's high, but there's a big order at 07. They're having a little bit of trouble getting to. So, and then I am seeing that the pressure come off here a little bit. So, I don't know. It might drift around here for, you know. Like normally you would get more than that out of it, but that might just been all that there was to it. Also, I'm seeing a hard rebound in the crypto market here. We did see the dollar push down a little bit lower, and did see the dollar is kind of bouncing around here a little bit. So here they are coming back up to the top. I got my fill. So part of me is like, I could have made a lot more than that, but I'm also kind of looking at this like I did want to be a little more risk adverse, at least the first part of this week, because of, you know, for both getting hurt last week and wanting to build some confidence, but also just kind of the situation and everything, and not having super strong predictors of order flow available for us. So I think that $10 is fine. I'm sure gonna regret saying that though if yields come all the way back to like 4% today or something, right? Actually, I don't think this trend is super strong in ES. It's slow and not very impulsive, but that's very healthy then. Well, yeah, I mean, okay, so think of it this way. In the S&P 500, the cumulative delta change went from 20,000 to 35,000. So it's a 15,000 net contract run, okay, which I would say is actually about average for the S&P 500, but we moved from 3810 to 3850, so 40 points up. 40 point rally in the S&P 500 seems quite strong on such low volume. But the thing that really impresses me about it is that it never really pulled back. They've hardly gotten more than like 2 points back. So it would have been really easy to hold risk on that move. You know, those are the best moves, are the ones that never tick back, right? Because then you never have to worry about, oh, okay, it's come back 2 ticks. Should I take profit, or like, am I going to get scared out here, or like, you know, and then it goes up higher? No, like with this one, you're just on for the ride, you know, never really stopped. That's impressive. The R squared, or another way of looking at it is if I make this S&P 500 chart really big, right? Look at R squared. It goes up to 0.9 and then just goes straight. That is a really strong, that means we are getting really strong autocorrelated trend in here. Somebody is buying TF out of this thing. They are really buying TF. Well, the treasuries made another reach there. Didn't quite get to it. 5-year coming back a little bit. Some flattening coming into the curve. Whew. Well, guys, how did our poll go? Only 6 of you voted and 3 said yes and 3 said no. Well, I don't know. If you really want me to stream tonight, you better go and vote yes, because I'm thinking I'm gonna not do it. It's okay, guys. Hey, listen, elections have changed, and election night isn't as fun, and it kind of pisses me off. And these nimrods that have been doing all this stupid crap to make it so that it takes longer to count votes and everything, I really wish they would cut it out. Because election night was fun, was a thing. I think that I think it's important. I think that there's a real benefit to being able to know that night what happened before you go to sleep, or at least do when you wake up in the morning to know what happened. But I prefer an election where there's a concession speech and then you go to sleep. So cut it out. Cut it out, Democrats. Stop doing it. No good. Should be able to do it all in one night. I kind of feel like the treasuries probably have more in them, but this order at 07, they're not going to get filled by that order at 07 from just speculators and stuff. There's not enough in it. No. So probably the big guys are going to have to make some sort of a concession here and come together and make a big trade, and then maybe they could continue the pressure up. The dollar seems like it's having a hard time making new lows too, and so I'm still, even though we pushed higher, I'm not necessarily getting a super clear sign. Although, well, it was a meta order in the treasury. Now we definitely got a second leg meta order in the treasury, but I'm not sure if this move in the dollar is going to continue is the problem. So I think that I'm just going to leave it there, guys. Oh, a bunch of you guys all said vote yes, vote yes. So now we have 9. That means that what, 6 of you said yes and 3 of you said no. Which it's pretty similar. So Pennsylvania is the big one. Pennsylvania is the big one. I'm gonna, dude, if Fetterman wins, I really don't think the Democrats deserve that seat. I think that Americans need to say, no, we don't think that somebody that just had a stroke should be reelected to office. It's just, is that not a fair way to do it? There was a Republican and he had a stroke, I would say no. Okay. Let's just, there's too many old people that aren't really, in charge there. I hate that. Let's put a stop to that. But it looks like it's going to be close in Pennsylvania regardless. So that's the big one to watch. Okay, well, I don't see myself streaming because here's the problem, because it's going to be like an all-night thing. Like, we might not know the results tonight. So if you guys want to hang out with us, we'll be in Discord. Maybe we'll do a live in Discord, because actually that makes me like, hey, we can do like the full stream. We can do like open mic on Discord. How about that? I'm kind of liking that idea. But I'm not quite sure what my wife's got going on tonight, so we gotta see that first, okay? It's an interesting night. We'll see what the markets do overnight. And then what the big thing, the only thing that really matters is CPI on Thursday, so don't blow your whole wad, okay? Don't blow your whole wad on tonight, all right? I will see you guys. So check out Discord, okay? Check out Discord tonight. I will see you otherwise. So I'll see you tonight or tomorrow for the stream. In the meantime, stay excellent, team.